So today I am going to be talking about break of structure in Forex trading. You want to know what break of structure means? BOS. I believe if you're a newbie, this is an important concept that you really need to learn in Forex. Break of structure will help you to know if a trend is going to continue or not. And break of structure is very good when you are in a trending market. And I am going to show you when to use it, how to use it in this video. So we are in GBP USD now. This is the asset, is 15 minutes. And one thing I will also want to explain about break of structure is the time frame to use it. If you are a day trader, it is best to check for a break of structure on the 15 minutes time frame. These are where the time frames are. So this is the 15 minutes time frame. You click on it so that each candle here represents 15 minutes because you are trading within one day as a day trader. But as a swing trader, you can as well use the 15 minutes or you can use 1 hour because you are trading within weeks or months, and for some people is many days. So you can just use 1 hour to spot your break of structure, or you can use the same 15 minutes. 15 minutes will give you a good entry. It happens quicker, so it's faster. It takes place earlier before the 1 hour will pick it, and you can have good entries with lower risks than someone using 1 hour or 4 hours. Now, first you'll be seeing people drawing this for you. I will just show you as a sample, then we'll pick it on the graph as well. So in a trending market, you have an uptrend which the market continuously go up, creating highs, and then a pullback, market retracing backward. Some people call it a retracement when market is falling down, or when market is falling down, they can call it a pullback. So it's pulling back. But one thing with a trending market is the pullback should not go and break this previous lower point, this first low that was created. So it may pull back to any level. Most times, I said, I did not say always, most times it will pull back to the 0.6 or the 61% Fibonacci level, or it will pull back to the 50% Fibonacci levels. Some will even pull back to the 38% Fibonacci level. So it can pull back at any level. Okay, but the most important point is that it will not pull back to the previous low and clear it. So what we are doing, let's say it pulls back to the 61%, and then you will see the market will continue to push and go up and create another high again. For it to push and create this high, it must first break this level now, where the first high was created. Then the second high is now created. It will now pull back again into another level, and then it will push up again and go and pass this particular second level that it created to create another high again. Then it will push down. It continues like that. That is what is called a trending market. These points, these lows, you are to take note of them. This is why the knowledge of market structure is very important in trading. If you don't understand which points are the lows and which points are the highs, you are going to have a lot of difficulty in identifying a break of structure. And this is the high, this is another high, this is another high that was created in this trending market. Now, if a high is created and price pulls down, and then it begins to go up to pass that level of the first high, that passage of the first high to create a second high is what is known as a break of structure. That point where the breakage occur at this particular high, where the breakage occur, is what you will call a break of structure. Some people represent it with BOS. Once you see this BOS, it means this initial high has been cleared. And for you to say there's a proper break of structure, a candle must close above that level with a full body. a body of a candle must close above that level, not with a wick. It can tap into that level, clear all the money that is there, because people's stop losses are resting at that point. That's what some people say is liquidity grab. So a candle must close above with a full body for you to know that there is a clear break of structure. It will now signify to you that the trend is going to continue to push up. So when that happens, ensure that it is not with a wick, because if it is with a wick, it is telling you that the market is not ready to go up. You must wait for the candle to completely clear that point with a body and not a wick. This is very important. Clearing it with a wick shows it is grabbing liquidity, is grabbing people's stop losses, grabbing people's money, and it doesn't want to go up. So it's either you wait that till the time it clears it completely with a body and close above it with a body of a candle. That is when you say a break of structure has occurred. And I am going to show you that. And when that happens, price will keep pushing up and it will form another high. Remember, a pullback will always happen, but then it shouldn't go below this low. If you are entering when this candle has cleared, there are two ways of entry. You either enter immediately upon the clearing of this with a full body, and a candle closes above it with a full body, you enter, or you will wait for a pullback into this region. That could be based on Fibonacci. You could wait for it at 0.5 or 0.61%, and it will help you as well to reduce your risks, and you have a good entry. So you can wait for a pullback. Once it's at 61%, you take your entry and your stop loss will still be below this previous low. And you will aim for ×2 or ×3 because this is for a trend continuation. That is what a break of structure is. Now let us see how this thing plays out in a real market. In a real market, look at how the structure of this asset is. This is GBP USD. This is GBP USD. You can see from this low that price pushed up and cleared this high. This was an initial high. So it is clearing it to form another high here. So let me show you where the break of structure happened. It happened at this particular level. This was an initial high. This was an initial high that was there. So if you enlarge the candles, you will see that the highest point around that point, this point, the highest point, this point, and you can see that the candle that cleared it is this greenish one, this greenish candle. It cleared it, okay? So your entry point now will be after the close of this green candle. You enter at that point, and your stop loss can be below the previous low. This is the previous low that initiated the move to go and clear this high. So here there is a break of structure here. So we can add there is a break of structure here. So it shows that this market is ready to continue buying. And you can see what happened over here. And if you hold on to it for a longer time, I told you always, so let me delete this sample that I've shown you guys just to clear the chart. So you can see now that the market moved up and still pulled back again to retest this level where there was a break of structure. Where there was a break of structure, it retested the level again and then continued to push up again. And we have another break of structure here, which is this point, this level. You can see that this level, a break of structure occurred there again. A break of structure occurred there. It created another low here and then pushed up. And you could see this level, there is a break of structure. So let me add break of structure, BOS. Break of structure, it is pointing to a continuation of the trend. So we are in an uptrend right now in GBP USD. And you can see that the candle that cleared it is with a full body. The full body of the candle is closing above this line. If it was a wick that is left and the candle melted down inside, you are not to take an entry until this particular line is cleared with a full body. And you could see what happened. The market continued again upwards. It kept going like that. There was a pullback again. It pulled back down. The lowest point it pulled back into is this point, where you can see is corresponding with where the break of market structure is. It must not be the exact point. Like I told you, it can return at any point. It can pull back even down deep. The important thing is shouldn't go below this particular level, the previous low. Okay. And then market pushed up again. So you can see if you had taken your entry at this first point here and you were to hold on, you would have gotten, even at this level, you would have gotten up to like, let's see, like times 3 of your risk to reward is 3. Look at the 3 here. So you would have gotten 3 risks to reward. Your entry was on the 19th of May and your take profit would have been on the 26th, which means you would have held it for 1 week, 7 days for you to get times 3. If you were to enter, this is a swing trade. This is a swing trade. So if you are riding a trend, you have to hold it longer. That's why to swing trade, you will get more. Okay? You will get more using this strategy. Now, if you want to just use this strategy for day trading, where you, or for scalping, where you deal with minutes, 5 minutes, you are dealing with 5 minutes, you are dealing with 1 minute, you've entered, you can use the same thing too, just that you enter the market within 1 hour, you are out. If it is a trend, you won't catch much. If the trend keeps going upwards continuously as this, you see how it is. And this market may continue to go up, upwards, like that. Now, if you are to check for the Fibonacci levels where these things are occurring, let's use our Fibonacci tool and see where the market is pushing downwards from. So if you use this, you can see market reversed between the 0.38 and the 0.5, or the 38% and 50. It reversed within that point. You can see that's where the market reversed from. If we take it again from here to see where this other level returned from, we can see market returned between 0.5 and 0.618. 0.5 and 0.618. That's known as the golden zone. Most traders target this zone, 0.5 and 0.618 of Fibonacci. You can see it. So I told you it can return at any point. Okay, so I always target the 0.618. I wait for it there, at least between 0.5 and 0.618, known as the golden zone. So if you are waiting for the pullback, or you immediately there's a break of structure, just go into the market. So when there's a break of structure, you can enter immediately, or you will wait for the pullback to pull backwards, like what happened here, or like what happened here. It all depends on what you want to do. Some people don't want it that once they have gone in, that they should see any drawdown. It gives them worries. So you have to wait for the second pullback. Sometimes this pullback may not occur. It may just continue to go like that. You can see how it is. So it all depends on your method of trading. Okay, but waiting for a pullback will give you less drawdown, and at the same time you have a lesser risk, because market will not continue with the same trend forever. So it might be at the break of structure here, when you enter immediately, market will pull upward a bit and continue to go downward now and start reversing the trend. In that case, a change of character occurs when it breaks and starts reversing the trend. Okay, no more break of structure again. So you see, you will lose more if market decides to do that, because you were entering at the immediate point. Something like this, you entered immediately, your risks will be below the initial low, and market decided not to go up again and starts reversing downward. You see, your risks will be high compared to someone that would have waited for a pullback to come down somewhere here before entering. His own risk will be lower. So if somebody was to wait for a pullback and you are setting it at the same point level, your stop loss is at the same level with the person. You see, even if market decide not to favor all of you, the person is risking less, you are risking more by these red parts that you are seeing. You can see. And if market decide to favor all of you and you are targeting the same level, the person is going to gain more than you because his risk will be times 7, whereas yours will be times 2.7, just because of how you entered. But sometimes this person that is waiting for that pullback may never happen, and the person will miss the chance, and you will get the chance. So trading is just a game of probabilities, but how you play it determines how successful you are going to be in the market. So that is how a break of structure is. Wait for a candle to close above that your point of break of structure. This candle now is the one that gave us that signal that there is a break of structure. It's a trend continuation strategy that you can use. That is how to trade this market. If you have any question regarding break of structure, just let me know in the comment section. That is what break of structure in Forex trading is all about. And if you want any mentorship, I do that for $100 for 6 months. Now, if you have any further question, just let me know. The link to my WhatsApp, just message. I receive just messages. The WhatsApp number is there. If you need to know how to make the payments, just contact me in the WhatsApp number that is in the description box. Any other question, just let me know in the comment section. Do have a nice day. Bye.